Today we're going to take a look at the canola market. It's been moving down here as of late, and you know what, we were hearing there's a lot of farmers out there that were undersold with this year's canola crop. In fact, there's even farmers that haven't sold any canola yet. Now I just want to go back here and reference the March canola futures contract just to describe exactly what we were looking at here from a technical perspective at AgChieve's. When we look at the market here, it rallied up from May all the way into August, and then it turned back down. When it turned down, it actually broke the lower boundary here of this uptrending line. Now we knew that the trend had turned down, and it was clear to us we had to sell the bounce. And on the bounce, we sold here on August 24th when the market was about $820 a ton. Market then turned back down here, dropped all the way down here to about the 680 level, bounced, and then again when it went up into resistance here in November, we made another recommendation to sell before it went lower. And that's the key. In a downtrending market, you've got to sell each rebound, and it tends to be lower than the previous one. And this is how you take advantage of marketing grain in a downtrending market.